Hello, traders, friends, and especially the ninza.co family. I'm excited to be here with you today in this webinar to share a scalping setup I've been working on. Let's dive straight into the main topic so we can make the most of our time. And the stars of today's session are Captain Optimus Strong, Nova Wind, and Z Pattern Triad. First, let's talk about Nova Wind, one of our all-time best-selling indicators. It comes packed with essential features, including trend detection and pullback signals that capture retracements within a trend, allowing for well-timed entries. Additionally, the trailing stop feature helps secure profits and manage risk by automatically adjusting the stop loss as the price moves. This combination allows for more flexible trading and optimizes entry and exit points effectively. The trend vector further enhances your decision-making by indicating when momentum is strengthening or weakening. Nova Wind is one of the few indicators that offer multiple functionalities in one, rather than focusing on a single aspect. However, the core strength and true essence of Nova Wind lies in its ability to deliver reliable trend signals. NovaWind provides high-confidence trend detection that works seamlessly across multiple timeframes. Many of you may already be familiar with NovaWind, but perhaps you're still unsure about how exactly it generates trend signals. Am I right? Let me give you a quick breakdown of how NovaWind identifies trends. The core of NovaWind is using ATR to determine trends. More specifically, it leverages NINZA ATR, an enhanced version of ATR developed by ninza.co. So why use ATR for trend detection? ATR, average true range, doesn't directly define trends. Instead, it measures market volatility. However, from this data, we can infer that if, within a price range, the current volatility measured by ATR fails to sustain or exceed previous levels, we can conclude that the trend is weakening, as buying or selling pressure is no longer strong enough to push the price further. The likelihood of a reversal increases as the market may be losing momentum, and the opposing side, buyers or sellers, begins to take control. As I mentioned earlier, NINZA ATR is what makes NovaWind provide more effective trend signals compared to a standard ATR. But why is that? Take a look at the chart and you'll see the difference. The standard ATR is displayed on top, while NINZA ATR is shown below. With its unique formula, NINZA ATR filters out short-term noise, making trend identification more accurate. Meanwhile, the standard ATR reacts to almost all short-term fluctuations, which can interfere with proper trend recognition. Now, you understand why NovaWind delivers such reliable signals. Let's get back to NovaWind and make some minor adjustments to the settings. I'll shorten the values for offset, multiplier trend and offset, multiplier stop. More importantly, I'll use the Fibonacci ratios 0.618 and 1.648 to fine-tune these parameters. One key rule: offset, multiplier. Trend must be smaller than offset, multiplier, stop. This allows the indicator to capture short-term movements more effectively, perfect for scalping. The essence of scalping is simple. Grab a few candles and exit. You don't need to catch a massive trend. However, scalping requires lightning-fast execution, and manual order placement can cause delays, sometimes leading to missed trade signals. To solve this, I'll use Captain Optimus Strong A system that lets you integrate any indicator for automated trading without relying on third-party tools. And here's how we set up NovaWind on Captain Optimus Strong. What makes Captain Optimus Strong truly special is its ability to build strategies using multiple indicators with no limitations. I'll demonstrate this combination later in the session. When using NovaWind as an input for Captain Optimus Strong, you need to configure NinjaScript signal correctly to ensure accurate trend detection. NovaWind divides trends into 3 phases, so without proper adjustments, you might miss key trend signals. We'll fine-tune NinjaScript signal to capture all 3 phases effectively. Next, we'll use NovaWind's trailing stop for trade management, helping us stay in trades while momentum is strong and exit at the right time when the market weakens, crucial for scalping. Finally, we'll disable unnecessary elements to keep the chart clean, making it easier to focus on the key signals from NovaWind. Now, let's begin our demo trade using this strategy and adjust our stop levels based on NovaWind's trailing stop to minimize risk and optimize trade management. Using a trailing stop not only helps lock in profits as the market moves in our favor, but also allows us to exit timely when the trend weakens without constant monitoring. However, if you don't adjust your stop based on the trailing stop, how do you determine an optimal stop placement that's not too tight to trigger early exits and not too wide to expose unnecessary risk? This is where we fully utilize NovaWind's trailing stop as a reference, helping us identify the most effective stop placement based on actual market volatility. Manually adjusting your stop loss for every trade can be cumbersome and inefficient, especially when trading at high speed and scalping. To streamline this process, we'll measure the distance from the last point of the previous trend's trailing stop to the first point of the new trend's trailing stop. This distance represents the market's typical adjustment range and can serve as a reference to set a fixed stop loss, eliminating the need for manual adjustments on every trade. A clear example of this concept can be seen in the distance between the last point of the previous trend's trailing stop and the first point of the new trend's trailing stop, which typically falls within the 60-70 tick range. This means that when a signal candle appears indicating a trend reversal, the new trailing stop will also be positioned approximately 60-70 ticks away from the signal candle, except in extreme cases like flash pumps or flash dumps. By leveraging this measurement, you can place your stop loss at a more strategic level, independent of the exact location of the trailing stop at the time of entry. This approach ensures that your stop placement remains effective, minimizing unnecessary stop-outs due to short-term price fluctuations while maintaining optimal risk management. Based on this measurement, I'll set the stop loss at 70 ticks and adjust the target higher than the risk, ensuring that your reward always outweighs your risk. As the system executes a trade, you'll notice that the stop loss is positioned around the trailing stop area, not too far to risk unnecessary losses, but not too close to be prematurely stopped out by short to. Based on the measured distance from the last trailing stop in the previous trend to the first point of the new one, I will set the stop loss at 70 ticks. This prevents premature stop-outs while maintaining controlled risk for optimal trade performance. The target will always exceed the stop loss, ensuring a positive reward-to-risk ratio and maximizing trend opportunities without excessive exposure. When a trade is executed, the stop loss automatically aligns with NovaWind's trailing stop, providing structured risk management while maintaining trade stability, RM volatility. This approach helps you secure your position effectively, allowing you to ride the trend without getting shaken out too soon. If a trade hits the stop loss, you exit precisely at the trailing stop, a level strategically placed to mitigate risk and avoid unnecessary stop-outs caused by market noise. More importantly, a trend reversal isn't just the end of a position. It's the start of a new opportunity. With NovaWind and Captain Optimus strong, you can re-enter the market immediately based on the fresh trend signal, rather than waiting for the previous trade to fully close before identifying a new setup. This ensures seamless trade execution and maintains momentum. However, there's one scenario that every trader will inevitably face when price comes extremely close to your target but reverses before hitting it. This is a situation that can heavily impact trader psychology, especially for those striving for consistency. Seeing a trade almost reach profit or even be in profit before reversing can undermine your confidence, make you second-guess your strategy, hesitate on future decisions, and even cause fear that prevents you from taking solid trades. If not managed properly, this can create a chain reaction of mistakes, leading to poor execution in subsequent trades. And let me emphasize this. In scalping, a well-structured risk management strategy is absolutely critical. No matter how good your system is, if your risk control is flawed, you will lose. How to minimize risk and secure profits. To mitigate the risk of price reversing before hitting your target, we will leverage NinjaTrader 8's NT8 stop strategy to automatically adjust the stop loss, ensuring partial profit protection before a potential reversal. In stop strategy, two key parameters need to be configured. One profit trigger. This is the minimum profit in ticks a trade must reach before stop loss adjustments are triggered. For example, setting profit trigger $50 solver means that once the price moves 50 ticks in your favor, the system will automatically adjust stop loss. 2 plus, this determines how many ticks stop loss moves above break even. If plus $0, stop loss will move to break even. However, if plus $30, then when the price reaches profit trigger, wire 50, stop loss will move 30 ticks above break even, locking in partial profit. Analyzing the stop adjustment strategy. Assuming Initial stop loss, Sugar 70 ticks. Profit trigger, Jacks 50 ticks. Plus more chart, 30 ticks. Relationship between profit trigger, 50, and initial stop loss, 70. 50 is 71.4% of 70, 50, 70, 074 turn. This means you only move stop when price has traveled 71.4% of your initial risk, ensuring strong momentum before adjustment. Relationship between plus 30 and profit trigger, 50. 30 is 60% of 50. 30, 50 for sure, 0.6. When price reaches 50 ticks in profit, stop losses moved up by 30 ticks, locking in 60% of the profit gained. In summary, when price moves 50 ticks in your favor, stop losses moved up by 30 ticks above break even. If price reverses, you still secure at least 30 ticks in profit. Profit retention ratio, 30-50 from 60% of achieved profit. Overall risk is reduced from 70 ticks to 30 ticks, meaning only Forrester's 43% of the original risk remains. So, what if the price hasn't moved 50 ticks yet, meaning I can't manually adjust my stop? Once again, this is where the trailing stop proves its value. Let's say I enter a trade with an initial stop at 70 ticks and a target of 100 ticks. My starting risk and reward, RR ratio, is 1.1.43, meaning if the price moves in my favor, I'll make 100 ticks, but if it hits my stop, I'll lose 70 ticks. This is a reasonable ratio, but I want to optimize it even further by managing my risk dynamically. And this is exactly how the trailing stop helps me do that. As the price moves in my favor, the trailing stop automatically adjusts, without waiting for the price to move too far before shifting the stop. I don't have to manually move my stop. The trailing stop does it systematically for me. Take this example. Initially, I set my stop at 70 ticks. But as the price moves in the right direction, the trailing stop follows along step by step. When the trailing stop shifts, I adjust my stop accordingly, following its path instead of keeping it at 70 ticks. Now, instead of a 70 tick risk, my stop has tightened to just 40 ticks. What does this mean? First, I've significantly reduced my initial risk. If the market reverses, I'll only lose 40 ticks instead of 70. Second, my profit target remains the same. I'm still aiming for a 100 tick gain, but now my RR has improved from 1.1.43 to 1.2.5. This means for every unit of risk, I now have the potential to gain 2.5 times that amount. Similarly, in this case too, we don't have to wait for the price to move a full 50 ticks before adjusting the stop. Instead, we can proactively adjust the stop along the trailing stop line, allowing for more flexible risk management. Even if the price hasn't reached the break-even point of 50 ticks, but I can still tighten my stop to just 30 ticks, then at this point, I've effectively taken control of my risk. My initial risk has been significantly reduced, while my profit target remains the same. The key takeaway here is that I'm not just minimizing risk. I'm also maintaining a risk and reward, RR ratio of 1.2, meaning for every unit of risk, I have the potential to gain twice as much. This is an ideal RR ratio that any trader would want to achieve. Once again, the trailing stop proves its value, allowing me to protect my account, secure profits, and trade strategically without having to wait for a fixed price level to make adjustments. And in case you run into losing trades, you can still minimize your risk significantly. So I've just shared with you how to place your stop properly and how to set up an effective risk management strategy. But keep in mind, this is a strategy that I have built based on my own trading experience and personal risk tolerance. Everyone has a different risk tolerance level. It's never the same for everyone. For example, I might be comfortable with 5 consecutive losing trades, each with a 70 tick loss. But you might only be able to handle 3 consecutive losses, each with just 10 ticks. That's why risk management isn't just about blindly following someone else's strategy. What really matters is understanding the strategy and then adapting it to fit your own risk tolerance and trading style. Now, let's move on to a real trade example using the exact settings, setup, and ATM strategy that I've been discussing with you. As the saying goes, seeing is believing. So I'll be applying Nova Wind with the following settings. Offset, multiplier trend MBR's 0.6 white heat. Offset, multiplier stop at 1.618. For the ATM strategy, I'll keep my stop at 70 ticks and target at 100 ticks, ensuring that my profit potential is always greater than my initial risk. And of course, the trailing stop strategy stays the same. Once the price reaches 50 ticks, I'll move my stop up past the entry by 30 ticks, securing profits and minimizing risk. From my trading experience, I've noticed that the US session at 9:30 a.m. tends to establish a clearer trend. This is mainly due to the sudden surge in trading volume as institutional investors, hedge funds, and major market participants step in. Additionally, price action reacts swiftly to fresh economic data and news releases, shaping market sentiment right from the start. Overnight developments are also digested, allowing traders to reassess market direction. Moreover, price movements from the previous session are often carried over and expanded upon as the U.S. market opens. This effect is even stronger due to the overlap with international trading sessions, especially the European session. All these factors come together to define the market's direction early in the session, providing clearer trading opportunities. Now, let's analyze the market on March 4th while observing how Nova Wind and Captain Optimus Strong perform in real trading conditions. On Tuesday, March 4th, the U.S. stock market continued its sharp decline, marking the second consecutive session of heavy selling. The primary reason behind this drop was the latest tariff measures, which raised investor concerns about potential economic shocks. On average, more than 4 out of 5 stocks in the S&P 500 ended the session in the red. However, one notable exception was NVIDIA, a leading large-cap tech stock at the forefront of the artificial intelligence, AI boom, which showed distinct price action compared to the broader market. Steepest losses of the day were seen in banking and retail stocks, as investors feared that the new tariffs could slow economic growth. That sums up my fundamental analysis for the trading session on this particular day. However, since this is a scalping strategy, I only enter the market for a short period, taking advantage of quick price movements to secure profits. Once I reach a profit level that I'm satisfied with, especially given the economic factors mentioned earlier, I will exit my trades and wrap up for the day. This approach helps me lock in my gains and avoid unnecessary risks when market conditions become unpredictable. Next, if you feel that Nova Wind alone isn't convincing enough, we'll take advantage of the most powerful feature of Captain Optimus Strong: the ability to build trading strategies using multiple indicators. For this setup, I've chosen Z-Pattern Triad as an additional confirmation tool. Z-Pattern Triad uses candlestick patterns to generate trade signals directly on your chart. It analyzes 3 distinct patterns and provides entry signals as soon as a complete pattern is detected. You can quickly enable or disable candlestick patterns through the alert section of the indicator. However, it's best to use only one of the 3 patterns at a time instead of enabling all of them simultaneously. This is because each pattern follows its own unique signaling mechanism. Using too many patterns at once can lead to signal confusion and information overload, making it harder to make clear trading decisions. And the 3 main patterns provided in this indicator are pin bar confirmation, the first pattern; tweezer top and tweezer bottom, the second pattern; narrow range, the final pattern. And now, the indicator has officially launched and is fully updated on ninza.co's product page. You can visit the product page to get detailed information and understand the signal mechanisms it provides. Also, if you have any questions or requests, feel free to leave a comment below or drop your email and we'll assist you right away. Before we move on to the next section, please take a moment to check out and take advantage of these amazing offers from ninza.co. Original $2,750, now just $796 with Captain coupon free Nova Wind, $696. Choose Strong, $896. Free Nova Wind, $696. And Z Pattern Triad, $596. Only 50 spots. Act fast. Scan the QR code or email support ninza.co. First, let's discuss the first pattern provided by the indicator, pin bar confirmation. I will adjust a few settings to better fit my trading strategy. Regarding the pin bar candlestick pattern, I believe most of you are already familiar with it, as it is one of the most frequently occurring patterns during price movements. So, what does a pin bar indicate? A pin bar is a technical signal indicating a rejection of a certain price level. With a small candle body and a long wick, the pin bar suggests that after price reached a specific level, strong buying or selling pressure pushed it back in the opposite direction. If it appears at the bottom with a long lower wick, it signals strong buying pressure, potentially leading to a reversal from a downtrend to an uptrend. If it appears at the top with a long upper wick, it warns that strong selling pressure could cause a reversal from an uptrend to a downtrend. The pin bar is one of the most widely used candlestick patterns in technical analysis, often signaling potential reversals or trend continuations. However, not every pin bar is a reliable trade signal. Simply seeing a pin bar appear on your chart is not enough. You need proper confirmation to ensure that it actually represents strong buying or selling pressure. Otherwise, you risk falling into the trap of false signals. For a bullish pin bar, the next candle should also be bullish and must close above a key level, such as a broken resistance zone or the pin bar's high. This confirms rejection of lower prices and strengthens the buy signal. For a bearish pin bar, the next candle should be bearish and must close below a key level, like a broken support zone or the pin bar's low. This confirms rejection of higher prices and strengthens the sell signal. To improve accuracy, the algorithm has been upgraded to prioritize pin bars that are followed by strong confirmation candles, clear bullish or bearish moves. These decisive candles indicate aggressive price action, increasing the likelihood of a breakout in the pin bar's direction. By applying these confirmation rules, we can filter out weak signals and focus only on high probability trade setups. Let's take a look at the signal on the chart for the pin bar confirmation pattern. Below is a real example of how the signal is validated based on the criteria I mentioned. Now, let's move on to the core. Part setting up a trading strategy that combines Nova Wind with Z Pattern Triad for optimal accuracy and performance. Why this combination? This time, I'm using the pin bar confirmation pattern to detect strong price rejection signals, combined with Nova Wind's trend filter to confirm market direction. Pin bar confirmation is a simple yet effective candlestick pattern that reflects price rejection. However, not all pin bars are reliable entry signals. Nova Wind helps filter these signals by only validating pin bars that align with the current trend. This eliminates weak signals and focuses on high probability trade opportunities. Strategy setup. Enable Z Pattern Triad and select only the pin bar confirmation pattern to reduce signal noise. Adjust Nova Wind settings to match a scalping strategy. I keep the trend parameters short-term to ensure responsiveness to price movements. Integrate my existing ATM strategy. Enter trades when a pin bar appears in the same direction as Nova Wind's trend. Set a trailing stop to lock in profits as the price moves in the right direction. Exit the trade when the price weakens or violates the strategy's initial conditions. Observing actual signals on the chart. By now, you have probably seen the chart signals of this strategy. During strong trending phases, pin bars appear at key levels, confirming price rejection, and providing optimal entry points. The trailing stop mechanism plays a crucial role in securing profits without exiting too early. Live trading with the Nova Wind and Z pattern Triad strategy, Wednesday, March 5th, 2025. Now, let's dive into a live trading session using the Nova Wind strategy combined with the Z pattern Triad. As always, my ATM strategy remains unchanged as I find it best suited to my trading style. Most importantly, this is a real-time trading session, no playback, no simulated data. Every trade decision reflects actual market conditions at that moment. This time, I decided to trade earlier than my usual 9:30 a.m. start. I executed trades at 9:00 a.m. instead. Let's see how the strategy performs in a live market environment. Risk management, the key to any strategy. Before we break down the trades, let me emphasize a critical point. No trading strategy guarantees a 100% win rate. Effective risk management is essential for long-term success. Regardless of the strategy you use, a solid risk and capital management plan is crucial. Successful trading isn't just about entry signals. It's also about controlling losses when the market doesn't go your way. Market overview, March 5, 2025. Today's market session saw significant volatility driven by the latest trade policy developments in the U.S. Key market events. The U.S. officially imposed a 25% tariff on imports from Mexico and Canada, effective March 4th. China retaliated immediately, adding an extra 15% tariff on certain U.S. products. Canada followed suit with a 25% tariff on U.S. imports, escalating trade tensions further. These actions led to sharp declines in U.S. equities. GM and Ford stocks fell by more than 4% and nearly 3%, respectively. Chipotle, which sources a significant portion of its avocados from Mexico, dropped 2%. Target stock declined 3% as its CEO warned of imminent price hikes due to tariffs. Investors had been hoping for a last-minute deal to prevent the tariffs, but U.S. dismissed that possibility, sending major indexes tumbling. Sam Stovall, chief investment strategist at CFRA Research, stated, "The real adjustment in the market depends on one key question: how long the U.S. will maintain these tariffs." As you can see, the financial market is always changing due to many factors, including economic news and global events. Therefore, besides technical analysis, we also need to consider other factors such as macroeconomic news and global political situations to have a more comprehensive view of the market. Next, let's explore the narrow range pattern. This is a crucial pattern mentioned in the theory of Wyckoff. This pattern identifies the candle with the smallest price range within a user-defined period, indicating price stagnation and a balance between buyers and sellers. Once the price breaks out of the narrow range candle, it often signals the beginning of a strong price movement. This breakout serves as a key trading signal, which is displayed directly on the chart to help traders capture opportunities in time. So, how does the narrow range pattern work and why is it important in trading analysis? This pattern identifies the candle with the smallest price range within a user-defined number of candles. It signals a temporary slowdown in price movement, where supply and demand are balanced, leading to reduced market volatility. For example, within the last 10 candles, the price range may typically fluctuate between 24 ticks, 32 ticks. However, among them, one specific candle exhibits a significantly smaller range of only 20 ticks. When this occurs, the indicator automatically marks this candle with a line, making it easier for traders to recognize areas of price compression. This is crucial because it indicates a temporary reduction in volatility, which often precedes a strong breakout. The key aspect of this pattern is how the price reacts after the narrow range candle. If the next candle is a strong red candle that closes below the low of the narrow range candle, it confirms a sell signal. This suggests that selling pressure has taken control, breaking out of the consolidation zone, and the price is likely to continue downward. Conversely, after identifying the candle with the lowest volatility within a defined range, if the price breaks upward with a strong bullish candle, this could signal a potential uptrend. This indicates that buyers have gained control, pushing the price beyond the previous consolidation zone. When price breaks out of a narrow range with strong momentum, it often leads to a clear trend, creating trading opportunities in the breakout direction. Thus, the narrow range indicator not only helps traders identify low volatility phases, but also plays a crucial role in monitoring trend changes, aiding in more precise decision-making. Next, let's examine the signal on the tick chart to understand how the narrow range, NR pattern works in real trading scenarios. Meanwhile, I'd like to share some additional insights about this pattern to help you grasp its significance in trading. The narrow range, R pattern, is a type of candlestick formation that reflects a contraction in price volatility over a specific period. When this pattern appears, it often signals a market accumulation phase, where buyers and sellers are temporarily balanced, causing prices to move within a narrow range. However, what makes this pattern crucial is that after this phase, the market typically experiences a volatility expansion, leading to potential trading opportunities. There are two common variations of the narrow range pattern. NR4, narrow range 4, the candle with the smallest range within the last 4 candles. NR7, narrow range 7, the candle with the smallest range within the last 7 candles. Typically, traders use NR4 or NR7 to identify potential entry points when the market shows signs of accumulation before a breakout. When the price breaks out of this narrow range, it can lead to a strong trend in the breakout direction. However, our indicator offers more flexibility compared to traditional NR4 and NR7 patterns. Instead of being restricted to these predefined setups, you can customize the search range, allowing you to identify the candle with the smallest range based on your specific trading needs and style. This provides a significant advantage in market analysis, especially when trading on short-term timeframes like the tick chart. Next, we will explore how to set up this strategy in Captain Optimus Strong to automate trading signals based on the narrow range pattern. This time, I will make a few adjustments to the settings to better align with the characteristics of the pattern. Unlike the previous 2 patterns, which can generate signals immediately when a candle forms, the narrow range pattern requires time to develop, as it depends on price range contraction before a breakout occurs. Key adjustments in the settings: offset multiplier trend WART1 and offset multiplier stop CYBER2. These values are adjusted to filter out excessive short-term fluctuations, reducing noise and preventing an overload of weak trade signals. However, this adjustment still ensures that the system does not react too slowly to significant trend shifts. Next, we will adjust the candlestick pattern indicator. In this step, you don't need to modify too many parameters. Just focus on the last 3 lines in the settings. Period is 4, min def is 4, signal split is 30. What do these parameters mean? Due to time constraints, I won't go into detailed explanations here. However, when using the product, you can refer to the parameter settings section, where we have provided comprehensive guidance. This will help you understand each parameter in detail and fine-tune them according to your trading strategy. Additionally, we need to configure the dedicated NINJA script signals for Z pattern Triad. Value, Plucker 3, represents a buy signal. Value, ears, 3, represents a sell signal. Important note: when you modify the Nova Wind parameters inside Captain Optimus Strong, you must also adjust the Nova Wind settings displayed on the chart. If these 2 configurations are not synchronized, the trailing stop line displayed on the chart will not match the Nova Wind settings inside Captain Optimus Strong. This mismatch can lead to incorrect trade management and impact your overall trading strategy. To ensure accurate pattern identification, you can visit the Captain Optimus Strong product page and check the dedicated NinjaScript signal section. This page provides precise numerical values for each pattern, allowing you to input them correctly and enhance the system's ability to recognize and respond to signals effectively. Now, let's dive into a real trading session using this strategy. This time, I'm applying the narrow range candlestick pattern together with Nova Wind in a live market environment on Thursday, March 6, 2025. And just to be clear, this is a live trading account, not a playback or simulation. My ATM strategy and trading hours remain the same as in previous strategies. Before jumping into the actual trades, let's take a quick look at the market conditions and news that led to the strong sell-off on March 6th. On March 6, 2025, the U.S. stock market continued its sharp decline, with the NASDAQ composite dropping 2.6%, officially entering correction territory with a total decline of over 10% from its December high. The main driver of this sell-off was growing concerns over newly announced tariffs, combined with weakness in tech stocks, especially AI-related companies. For the week, NASDAQ lost 4.1%, bringing its year-to-date decline to 6.4%. Given this market backdrop, I decided that the best approach for the day was to focus on sell trades and avoid taking buy positions, staying aligned with the overall trend. Finally, here's a quick breakdown of my trade performance using this strategy. The results were solid for a scalping approach. After hitting my target, I stopped trading to lock in profits. And this is what I want to emphasize. Scalping isn't about trading all day long. In this session, I only took 14 trades, and the moment I reached a satisfactory profit level, I closed out and secured my gains. So, we've just shared how we build a scalping strategy with our 3 products, Captain Optimus Strong, Nova Wind, and Z Pattern Triad. In this webinar, we focused on explaining in detail how to set up, manage risk, how to combine the products, and live trading examples, along with some interesting global market insights. We hope you enjoyed it. Finally, we'd like to introduce our exclusive offer for these amazing 3 products today. NINZA's Extreme Deal, 48 hours left. Original price, $2,550, super special offer. Captain Package, $796, use coupon CAPTAIN, and get Nova Wind worth $696 for free. You think for $796 you've already bought 2 items? Think again. For just an extra $100, you'll get 3 incredibly powerful products that will elevate your trading game to a whole new level. Here's what you get. Strong Package, only $896, use coupon STRONG. And get Nova Wind, $696 plus Z Pattern. Triad, $596 for free. Just add $100 and you get all 3 powerful tools, making your trades not only safe, but also super profitable. Remember, only 50 copies per package, and you've got 48 hours left. This is your one and only chance. Don't let it slip away like a missed opportunity. Scan the QR code now to grab the deal, or contact support.ninza.co for help, because who would want to miss out on this deal? Are you still here? I have something exciting to share with you. Stick around for a bit. You won't want to miss this. Are you curious about it? Sky Fibonacci, a completely new concept for Fibonacci retracement, has officially launched on ninza.co. Don't miss out. Visit the website now to explore. Goodbye for now, and see you in another webinar. Wishing you all a week of successful and profitable trading.